Okay, let's do this. So, now I want to talk about inflation in Europe. Because we've been seeing rumblings of inflation in lots of places for the past 2 years. And I've already talked about this before in the United States. However, now I want to look at Europe. Because while headline inflation in Europe has been high for a little while, right now it's core inflation in Europe that's starting to get high. So up to this point, people could possibly dismiss the high inflation as just a one-off spike in energy prices that would go away as soon as energy prices either went back down or the new higher prices got baked in and became the new baseline, whichever one of those possibilities. But now that I've properly introduced and explained the background, I want to talk about core inflation. Because core inflation, that is, inflation that excludes food and energy prices, is finally starting to get high in Western Europe. So you could dismiss variations in energy prices and food prices, but now with core inflation being high, you can definitively say that real, actual inflation in Europe is getting high. Now, core inflation in Eastern Europe has been high for a little while, but now, at the end of 2022, inflation is definitively high in Western Europe for the first time in a long time. I mean, just like the United States and lots of other places, inflation in Europe is generally the highest it's been since the early 80s, when you had the last bout of inflation in developed countries that was really high, which had something to do with the events back then. So now that I've talked about what's happening, let's look at the actual numbers. So I brought up this page from the OECD, which lists core inflation, that is, inflation excluding food and energy, for all countries in Europe. So looking at this list, you can see that inflation in Eastern European countries from Hungary to Latvia is high, like core inflation is over 10% of those countries. In Hungary, it's the worst of all, with core inflation at 14%. But even in Latvia, core inflation is 10%. So inflation excluding food and energy prices. Sweden is the Western European country with the worst core inflation at 8.7%, which is ridiculously high. Sweden doesn't get the benefit of being part of the euro, so it has its own currency. And obviously, the Swedish krona is going to be fundamentally weaker than the euro, because it's like one small country of 10 million people. What could you really buy from that country? What's so special about it? While the euro's backed up by the whole 360 million population of the eurozone, and it includes countries like Germany and France where you could get some very, very important specialized goods from. So Germany is famous for its high-quality exports of, like, robotics and stuff. And France makes jet engines and nuclear reactors and things like that. So the countries in the eurozone have something going for them, while Sweden's just like this lone country with a stupid currency. So it's much more vulnerable to inflation and fluctuations in currency demand than the Eurozone countries, so I guess it shouldn't be that surprising that Sweden's doing the worst of all. But then again, there are other European countries with their own currencies, like the Switzerland with their franc and the UK with their pound, that aren't doing as bad. So it's still... So Sweden seems to be doing something wrong in addition, or having some bad circumstances in addition to just being generically hit with whatever's hitting all of European economies in general. And I did have a video a little while ago where I talked about Sweden's specifically delicate situation because of a housing bubble that's occurring there. Well, anyway, Sweden is the country with the worst inflation situation in Western Europe. Then we have Portugal and Austria, where core inflation is 7%, so it's still very high there. Then you have Slovenia and an Eastern European country. In Belgium, core inflation is 6%, which is worse than the United States. You can see how high core inflation is in Greece and the Netherlands. It's like 5.5 and 5.7%, so it's pretty high there. I mean, it's not as high as what it is in the US and Canada, but it's almost as high. Denmark's another European country, Western European country that's not in the euro, but core inflation in Denmark isn't as bad as in Sweden. But nonetheless, it's still pretty high at 5%. Then core inflation in Ireland and Germany is high at 5%. Core inflation in Spain and Italy is elevated, but not as high at 4%. But 4% is still pretty high. And then at the bottom of the list, you can see that core inflation in France and Japan is still pretty low. Though core inflation in Japan is still pretty high for Japan. But that's a topic for another day. You can see that throughout the past 2 years, core inflation in European countries has been building higher steadily. So finally, in July and August, core inflation in Spain and the Netherlands reached a point where core inflation was outright really high, at above 4.5%. Now after that, in Spain it went back down a little bit, but in the Netherlands it got higher and higher until core inflation reached almost 6% in October in the Netherlands. So during this period, core inflation in Austria got higher a little earlier, and that fits with the fact that core inflation in Austria is the highest in the Eurozone at 7%. Well, I mean, it's the highest Western European Euro country after Portugal. Okay, Portugal and Austria are the highest Eurozone countries in Western Europe. The other Eurozone countries in Eastern Europe are Eastern European countries, and Sweden isn't in the Euro. So, in Austria and Portugal, core inflation has been the highest in the Western European countries in the Eurozone, and then it's been the Benelux countries, so the Netherlands and Belgium, and Spain. Though in Spain it's gone down, and in Germany it's gotten high, so now core inflation in Germany is higher than in Spain. But inflation in Spain got higher earlier, but now it's gone back down, and now inflation in Spain matches Italy. So at the end of 2022, core inflation in Europe, in Western Europe, is generally like about 5%, though there are still a few countries like France where core inflation is still lowish. But we can now say that core inflation in Western Europe generally is now definitively very high, and we can say that it's real inflation that's high, and this is no longer just a one-off impact of like high food and energy prices. So this is something that's now systematically occurring in European economies, and you can no longer dismiss it as just a temporary impact of an external shock. So now Western Europe is going to have to really deal with these consequences of what's happening. And Western Europe is in general way more sensitive to inflation because it's much easier to get wage price spirals going in Europe because of the strong labor dynamics and how their labor market is set up. So it's way easier to get a wage price spiral going in Europe. Now this is the exchange rate of the euro to the dollar, and you can see that right now it's basically back to where it was before the virus, so its long-term place. I mean, you could see that pretty recently, though, the euro was pretty weak. But that was more of a function of the fact that the dollar was strong than that the euro was fundamentally weak in terms of other currencies that were not the US dollar. So, I mean, the euro did go down a little bit in fundamental terms, but it's not as bad as this chart's showing, because this chart's more reflective of strength in the dollar than the weakness of the euro. But what's fundamentally been occurring is that the dollar has been strong, so this inflation has been occurring in spite of the fact that the euro as a currency has not really been weakening. Now the yen and maybe the Swedish currency has been weakening, but not the euro in fundamental terms. So these dynamics are occurring. So Western Europe is experiencing very high core inflation in spite of the fact that the euro is still relatively strong. So imagine what would happen if the euro were to actually get weakened for real. Then this would be a lot worse. However, since the euro is already not that weak, a strengthening of the euro currency is not going to reverse these dynamics, and euro can't. So we've seen that real core inflation has now gotten high throughout most of Western Europe. I mean, France being the one exception that's actually in the Eurozone. No, I mean, you could see at this chart that the yen has really weakened against the euro. And the yen is a currency that's really weakened, so if the euro were weakening in real terms, then it should be matching the yen, not strengthening against the yen, which it has been. I mean, you could see that natural gas prices in Europe are about where they were a year ago. And again, wheat prices are also roughly where they were a year ago. So the thing that's driving price dynamics in Europe is no longer a one-off shock generated by higher food and energy prices. Those are back to where they were a year ago, so all inflation in Europe is now being driven by fundamentals and core non-food and energy prices. So what this means is that Europe inflation is not going away. It's being driven by fundamental dynamics within Europe now, and inflation is now being driven by the fundamentals within the European economies. So they're going to have to deal with it, and they can no longer hope that it's just going to go away on its own. If it is going to go away, Europe is going to have to do something specifically about it to get rid of inflation. They can no longer pretend this isn't happening because they could tell themselves this is just going to go away on its own. They're going to have to deal with the situation that's actually happening in Europe. And now the core inflation is high. The inflation within European economies is now being driven by the fundamentals of those economies, and they're going to have to either deal with it or expect it to continue. So here is a graph of wages in the United States that I've pulled up, and you could see that month on month, average hourly earnings have been the rate of increase has been increasing, but still not at a point that's been unprecedented for like 1 month as a one-off blip over the past 2 years. But the data is going to, the new wage numbers are going to come in tomorrow, and we'll see if it stays in this range or if wage increases are going to increase at a higher rate soon. And at that happens, then there's going to be even more pressure on inflation because wages are increasing at a very high rate, and that's going to put more upward pressure on inflation. And whatever the wage dynamics in the United States are, the wage pressures in Europe are going to be a lot higher, and that's going to put even more upward pressure on inflation in Europe, and that's going to keep inflation in Europe even higher. So whatever the wage dynamics in the United States are, the wage pressures in Europe are going to be even higher, and that's going to result in even worse inflation. And inflation in Europe, as I've been saying, looking at the core rate, has now finally gotten really high in terms of the real core rate of inflation. So let's look at what interest rates are in the United States. So I think the Fed rate is like 4%. So interest rates US. Yes, so the core rate of inflation, no. The main federal interest rate in the United States is 4.25%. So interest rates in the United States are now 4.25%, and they're finally at a rate that's like in the historical range of normal. Now, core inflation in the United States is still like 6%, so rates are still negative in real terms, but rates in the United States are still very high. Now let's look at the European interest rate. I think it's like 2%. Let me double check. Yeah, conversely, in the Eurozone, the European interest rate's only 2.5%. So core inflation in both places is comparable, but core interest rates in Europe are still, not core, but the main interest rate in Europe is still like a lot lower. So in the United States, interest rates are at least like 4.5%, but in Europe, interest rates are still only like 2.5%. So interest rates in Europe are still real interest rates in Europe are still a lot more negative in the United States, while they're a lot less negative. So in the United States, you can at least hope that inflation comes down a little bit, and by the end of the year you'll have positive real interest rates, even if the nominal rate doesn't go up that much. But in Europe, the interest rate is still very low compared to the US rate, so interest rates are still very, very negative in Europe. So core inflation is now very high in Western Europe. And because it's no longer food and energy prices, it's now the rate that's being sustained by the internal dynamics of the European countries. And the real rate of inflation in Europe is high. So it's a lot. So now the European countries have to grapple with the fact that inflation in their countries looks like it could be self-sustaining unless they do something to intentionally get rid of it. So if inflation wasn't core inflation, you could pretend it's just a one-off spike in energy prices, and it'll go away on its own. But that's no longer the dynamic, that's no longer happening. So now Europe has to deal with the fact that inflation within Western Europe is genuinely high, and they're going to have to do something about it. But interest rates in Europe are still a lot lower than interest rates in the United States. And Europe has wage dynamics that make it a lot more sensitive and easier to get a wage price spiral going in Europe than the United States. So wage pressures have the potential to make inflation in Europe a lot worse. And the ECB is still keeping interest rates in Europe a lot lower than the Fed is in the United States. So that seems to be the situation. Because over the past 2 years, core inflation in Europe stayed pretty low in spite of the inflation story that's been in the background over the past 2 years. But now, finally, at the end of the year, core inflation in Europe is definitively high. So, under all definitions, you can no longer argue inflation in Europe is low. But now, under all criteria, inflation in Western Europe is now definitively high. And Europe is going to have to deal with that fact. And handle the consequences of high, genuine, real inflation.